Hello everyone, welcome to the channel. Today we're going to be looking at Home Depot, the stock, the company, whatever you want to phrase that. We're going to be just diving into some numbers, looking at the charts and things like that. And we're going to do a general review of the stock and see if it's something you're interested in, just talk about it a little bit. So first thing I always like to do when looking at a stock, I like to look at the 1 year chart, 40% up, 5 year 80, which is okay, right? And then all time, but more preferably the 10 year. And the 10 year is actually really, really good. That is over 4x. And also, pay attention here, 2.2% dividend, which there's many times over the course of that 10 years, this dividend has been higher than that. So this is just generally a really good stock. It's performed well over the last 10 years. It's kind of actually been a behemoth, man. I don't know if that's true anymore, but I know there was a point fairly recently within the last couple of years where Home Depot outperformed Apple since 2008, since the financial crisis. I don't know if that's true anymore, so I'm not going to claim that, but Home Depot is kind of a sneaky, like, absolute beast of a stock. I'm assuming most of you know what Home Depot does, right? They work with contractors and they sell, stuff for home building and home repair and all that sort of thing. So I'm pretty sure they're the biggest person in the space. If they aren't, they basically, 400 billion they are. So I would be shocked. I don't know. Lowe's is much smaller. Well, not much smaller, but half or a fourth the size roughly. I also like Lowe's quite a bit too. Let's look at the PE and Ford PE before we dive into some things, right? So it's projected to go flat, but that's mostly because no one's really been building because of rates. Rates have been high. That's also why it's been flat it's gone up the last year, but it was, flat since the highs in 2021. It's actually just now reaching those highs. Lots of stocks are similar to that, right? Lots of people hit lows in the 2022, 2023 area. But Home Depot, even over the entire 5 year stretch, it's done well. And even if you bought at the incredible highs, you probably bought high on many stocks. Not all, but many. And the dividend at least has given you something over that time period, right? But yeah, so the reason it's flat is mostly just because with rates being so high, no one's really been building, no one's really been buying homes. I'm sure many of you are probably aware of that situation, right? If you're looking at Home Depot stock, I'm sure most of you are at least financially aware enough that you know about that situation. But that's also part of the reason it's run up, so dramatically, even over just the last year, right? Year and a couple months. From 270 to 400. So beat. I like to see that. I always say it's something to look out for. If a company is missing earnings consistently, at least if that's what they're projecting, sometimes it's just analysts projecting it. You got to be wary about these numbers here, right? These projections. Because sometimes it's just analysts saying that, they missed. They did that with Tesla recently. It's like, they missed off of our own projection that we set for them, right? It's like, is that really missing? But anyways. But if they do set their numbers, hey, we're going to hit this, and they keep missing, it either means they're lying to you or they do not know their company, which neither is very good. So generally, there's other scenarios, but those are the most likely. Schwab will compare it to other similar things. There's really not a whole lot of similar. It's mostly just Home Depot and Lowe's in the U.S. There's other smaller companies, but if you're talking about, so Lowe's is 152, so they're about a third, roughly, of Home Depot. But there's no even, TJX does different, obviously, auto parts, and AutoZone are more vehicle rather than home, clearly. But anyways, let's dive into some risks. Clearly, just when the market goes down, it's going to go down, and that sounds silly, right? But there's other hedges like REITs. Most of it you're just going to get them to run sideways and get that dividend anyways. So, but things like Campbell's Soup or like Procter and Gamble, things like that, aren't really going to go down as heavily as Home Depot because probably if the economy is really bad during a recession, people are not really going to be buying new homes and building a bunch of new homes, unfortunately. Then again, it's not going to go down as dramatically as like a unprofitable tech stock, right? Those got destroyed in 2021. There's so many. But that's for a different day, right? I mean, there's not a whole lot of risks, really. I mean, you could say maybe in the long term, right? I like to look at 3 to 5 years because I think anything past 6 to 7 years, you're just kind of throwing darts at the wall. So much changes in 7 years. So much changes in 7 years, right? Like leadership can change. There could be a huge technology, like think about 3 years ago. AI was like nothing, right? Nothing. It was like maybe this is a thing in the future. Now it's like everyone's all in AI, at least right now. Who knows if that'll pan out? I think it will, but if you don't, that's completely fine. So there's so much that changes, but also within 3 years, it's so narrow that there could just be something else in the market going on that affects the performance of a particular stock like Home Depot, right? When that doesn't really underline the company itself, right? Because Home Depot will continue to do fine, I think, personally. I own Home Depot, full discretion. I like it. I like the stock a lot. It makes up a decent portion of my portfolio. I bought almost around 300 flat somewhere. I think it was early 2022. So I think it was around here. So I've done pretty well on it, along with the dividend as well. And it was higher for most of that because it was a cheaper valuation. And I think it was about the same, actually. But no, it was 25% cheaper, so. Yeah, but I don't think it's that risky of a stock. I really don't. People are gonna, and I guess I was going with the long term. Long term, if you think population is gonna decline in the United States like it is in, we're seeing that in China, Japan, Korea a lot. But I'm personally not too worried. I think immigration, whatever your opinion, now it's getting a little bit political here. I'm not trying to get political, but I think U.S. is gonna supplant population decline with immigration. So I'm not too particularly worried about that for the United States, long term even. So I'm fine with holding this stock forever. I don't really see any major risks with it. There's only one other decent sized competitor, which is Lowe's, and they're a third of the size, and I don't think Lowe's is going to start taking Home Depot's lunch money anytime soon. They have, they work with contractors and things like that. And so yeah, I agree with this Mo. Well, I'd give it an 8 or a 9 even. I hate the scale of 0, 3, 10, but I would definitely lean towards wide, right? I give it an 8 or a 9 just because they're huge. Everyone knows them. They're everywhere. I mean, I bet you have a Home Depot near you, right? Unless you're really, really, really rural. Just things like that. And they've performed really well, I think. So Schwab's 1 year performance, they have it in the top 10, top 7 percentile for 1 year performance, and that doesn't include dividend. So if you trust Schwab 100%, go for it. They think you're going to make a lot of money. Morningstar says avoid, although some of these, I need to do a little bit more research into what each one of these says, because some of them are short term, just almost looking at it in terms of trading, which is fine, but that's not particularly what I look at stocks. I look for more of a long-term hold. Market Edge says long, Refinitiv or whatever, I always mispronounce that, it says buy, decent ESG score, whatever you think of that. They increased their dividend earlier this year. They're going to keep increasing it continuously. So if you like dividends, if you've got a dividend growth portfolio somewhere in that 2.5%, 3%, 4% range, this could be one. Obviously, it doesn't get anywhere near 4%, but if you have some that are a bit higher, maybe 5 or 6 yield, right? Maybe like a Vici that isn't going to grow as much, although Vici's grown quite a bit when I've held it recently. This could be one that can replace some of that growth, So, anyways, I don't have a whole lot more for this stock specifically. I love Home Depot. It's great. It's been a quiet behemoth these last 10 years. On performance. Like I said, more than 4xing in the last 10, which was the S&P 500, not including the let's just do VFIX. That's what I do. I mean, it's basically the same. Since 2014. Yeah, so it's over doubled the performance of the S&P 500 while yielding twice as much. Right. Now that doesn't mean it's going to perform that much in the future, right? Nothing says it did this, therefore, but I mean, when I'm looking to invest, I like good companies with a growth track record, good leadership, not a whole lot of risky competition. They're profitable, things like that. And Home Depot, and they've done well. Home Depot hits on every single one of those categories. I love Home Depot. Of course, do your own research. This is not investment advice. This is for entertainment, education, all that. But hey, if you made it this far in the video, I appreciate you watching, like genuinely. If you leave a like, subscribe, and things like that, like especially just liking helps the algorithm so much. Literally, almost every video I have that performs decently, which for me is not that impressive, but it's because someone watched it and liked the video. So if you made it this far and want to leave a like, that would make my day, and it would really help the channel out a lot. But anyways, I appreciate all of you guys for tuning into this video, and I will see you guys next time. See you later.